All right, everyone, welcome back for the episode of This Weekend Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets this week, lots of stuff going on. So lots to cover here. I'm sure I'm not even going to get to everything, but as far as the charts are concerned, we did continue, for all intents and purposes, we did continue to bounce here. So you can see another green week there on the S&P, and you can see we, again, just back check to that weekly 20 moving average. We are still inside of that sell candle on the weekly time frame from a few weeks ago. So markets are getting a continued bounce. I'm in the camp here that the market bounce is getting close to its conclusion, but we did have a continued rally. And overall, the markets ended the week higher. Lots of stuff going on, though, this week. So we had the FOMC on Wednesday, obviously. We also had the quarterly debt issuance from Yellen, the QRA. And, so a little bit on the long end now, a little bit more than expected. So she's going to have to issue a little bit more in, long duration. And you can see bonds here this week actually got a bounce towards Friday. We'll get into the non-farm payroll report in a second. But I think some of that was a little bit priced in. So bonds did get a little bit of a bid, specifically Thursday, Friday. But we did have that going on. We also had Jay Powell on Wednesday saying that they're going to essentially taper down the QT. So they're calling it quantitative teasing now, right? Because it is... they're going to go from 60 billion down to 25 billion. Pretty large drop. And, as Jason here speculates, not enough foreign demand. We talked about the yen last week, speaking of foreign demand. And if you remember, go back to the video. I said maybe a mini short-term blow off top. That was right here. And Sunday night, we had the big pop. Look at what happened. The yen definitely, the BOJ definitely intervened. I mean, there's no question about this. Is not a real, this is not a market institutional player doing that. It's certainly not retail. That's a government move, and they did it. Look at this. They tried to do it on Friday afternoon. It didn't work. Again, 1, 2, 3, 4 times they smacked it, and even today they smacked it a little bit more. So looks like the yen, Japan intervening a little bit. Take a look at we're basically back testing now that breakout on the dollar yen. So again, that's kind of the risk, right? Japan sells treasuries, it pushes yields up. That causes risk for risk in risk assets. And the big risk, right, is the unwind of the carry trade. I don't know if we're going to go that far here, but it's certainly a huge risk, and that is happening right now. So the market did, at least on Wednesday, you're going to see here. Let's just go to an intraday just so you can see how wild. This was after Jerome Powell's press conference, and then this was about, this is when he was doing Q&A. Big whipsaw, big volatility. Thursday, we tested the lows again, came back up, and then today, we had non-farm payroll. That number was a massive miss. So that was, I believe, 175. Don't quote me here. Actually, let me get the data right now. I do it on either screen here if you didn't catch it. Yeah, 175 versus 238 expected. So you can see it right there. And obviously that, market likes that, gets us closer to rate cuts. That's the idea. I will say the bond market, though, taking a look at the ZB here, it's the 30-year note, kind of faded a lot of that move off of the, here's the reaction. And you can even look at the 2-year as well. Finished the day kind of soft. So maybe the bond market saying to stocks, let's not get too ahead of ourselves. Again, the stock market tends to jump the gun. Stock market's goldfish brain, right? The bond market's deeper and it's smarter. So definitely a weak jobs print. But again, if inflation stays sticky, that's going to be kind of the boogeyman, right, for risk assets, as you have stagflation. Now, Jerome Powell said he doesn't see the stag and he doesn't see the inflation. I wish I was making that up. That's a real quote. I think there's a lot of politics going on here. It is an election year. And I think that he saw the jobs report beforehand on Wednesday. That's very likely, and that's why he had that cushion to say that. But you let me know in the comments what you guys think. But in any case, that's kind of the sum up of what happened this week. We could talk about Amazon as well. Amazon had a good reaction to earnings earlier this week. And then Apple had a good reaction today after reporting earnings yesterday. However, their earnings were terrible. They just announced a record buyback. Big surprise, right? Apple, the king of buybacks, I think it was 110 billion. So Tim Cook going to work here again, and it's all legal, but you can see we went right up into that 618 retrace on Apple, and it did pull back today. So I'm wondering if that goes down and tests 180 early next week. But overall, the market got through all these volatility events relatively unscathed, and we had a green week. So again, we'll leave it at that for now. I don't think we're going to have a ton more upside here in the SPX. I've already got levels done for members, but let's just say our next target is around 5150, maybe a little bit above that, and then I think I would see sellers likely coming in here. Already seeing sentiment shift now that we've had a nice pop on Friday. People getting kind of FOMO from what I can see, and that remains to be seen if we do get lower highs here. But again, continuing to bounce. Again, I talked about we were going to get a bounce here. Everybody was throwing themselves off a cliff over Iran and inflation 2 weeks ago. So, I was calling for that bounce there, and now I think I'm getting onto the other side here. So, speaking of which, before I even get into the Qs, you guys know I've talked about China quite a bit recently. I've actually been taking some profits on some of my China plays. And if you'll remember, I was one of the only guys back in January saying, I like China down here. There was that article that came out about investors were paying 15 to 20% premiums to get their money out of China into the Nikkei and into the NASDAQ. That was such a contrarian signal to me. And it remains to be one of my better calls here. Not to, take a victory lap, but just kind of throwing that out there. Hang Seng now up 9 days in a row. And the last time that happened was Jan 2018, only 21 events since 64. Average 1 year return 28.5%, 10% drawdown potentially, and 1 year max gain 54.6%. We can look at the Hang Seng right here. Look at that big move here, triggered inverse head and shoulders. Shanghai Composite, I also have a play on this. Nice wedge breakout. So I just wanted to cover China there. They can devalue, and that's part of the case here. And I think things got way too bearish in January. Look at the FXI. This is when I was starting to inch in long, and that was a great play there. Anyways, let's get back over to the markets here, or get back to the U.S. markets. Triple Qs, I think 440 is a good level for that. You are above this line, and that's why everybody's happy. But, don't fall in love with trend lines here. 440 is going to be resistance on the Qs right now. The IWM had a nice bid. I told you guys 202.50 to 205. We did back check to this trend line here, and it backed off of it today. So I don't know how much upside the Russell has, but it did get a bid. And the fact that it came off the highs today too, right? The Russell stands to benefit the most from rate cuts. And I think that is telling, right, that the Russell wasn't rallying more than the rest of the market today. I mentioned the bond market kind of calling BS earlier. Right, the Russell should be the strongest index. If you look at the intraday here, notice how the Russell didn't really recover that opening range from this morning, whereas the spiders and the Qs did, and the Dow. So again, little red flag there. I think bonds and the Russell may be signaling a little warning here. The Dow finally got out of this range, so we've been stuck between 385 and essentially 376, 377 for about 3 weeks now. But we did pop through it today into the 50 MA. I think we could get up to 390, maybe fill that gap. Semiconductors continue to be mixed. So we had AMD earnings. That took a hit. It did come off the lows. We also had SMCI earlier this week. That took a hit. It came off the lows as well. The more time this stock spends down in this range here, the more I think it's setting up for a move towards 5. But in any case, with the SMH, I think 223 is a good resistance zone for right now. But it did get a higher low here, so definitely needs to be respected. In the short term, the IGV I do not like nearly as much. In fact, I just don't like it at all. We have a down move here, and we're inside, essentially putting in a bear flag right now. 82 to 83, maybe this trend line here. Maybe we could even kind of stay in this range, right? And kind of chop up into this area here over the next week or so, and that could be resistance. So be careful with cloud here. I don't like the chart. Dow Transports, I do not like the chart either. Again, this is laggard sector. It's very simple. Sometimes it just don't need to overcomplicate it. Look at the high from the 23rd. Even with today's rally, we're below that. Look at the SPX. We're way above that high. And even the Russell 2000 is above that high by far. So transports, laggard sector, don't like the chart. All right, interest rates here. So let's flip over. We'll get to the 2-year as always. So again, we had a pretty good dump today, but it came way off the lows and we held that green bar low by the end of the day. So the 2-year lives to fight another day on the yield. If we close below this green bar, I would change my stance and say that bonds are going to rally. But right now, this is inside of that green. And, if it holds up, it can get up to that 5.25 area. Same thing with the 5-year. Green bar is holding. 50 MA is holding. Nothing to say we can't go higher. And the same thing with the 10s and 30s. Maybe the 30s start to retrace. We could get down to that lower trend line again. But right now, the pattern's not terrible on yields. Despite the a lot of data that came in and was positive for bonds. I'm open to the idea of bonds rallying, but right now the charts are not necessarily indicating that right yet. XHB, so again, continuing to stay inside of this channel here. We did get a big bid today and tried to get outside of it, but it closed back in. So again, sellers willing to step in here, right into this zone. See right there, we went right into that. Here, let me just draw it out. There you go. So we went right into that, and we did back off on the XHB. So what remains to be seen is this come back down, and does this bear pattern eventually break and head us to the low 90s. So home builders coming in. VNQ got a pop today, but again, I told you guys 82 to 83 would be resistance. We got up to 82.64 today, and then we pulled back pretty steeply. Tested the 200, pierced it, and closed below it. XLF still hanging in there. It was a down week, I believe, though. Yep, so down week versus the spiders having an up week. And you still have that big wide range red candle. I think this is setting up for another zigzag down to the 38 handle. I wouldn't rule out in the short term, up to, zigzag 1, 2, 3, up like that before a rejection down. But bigger picture, I still have a downside bias on the larger time frame. The KRE has been actually outperforming. I think NYCB reported earnings, and that got a bid. It doesn't look like much, but this is actually like 30 or 40%. Is it's just like the charts had such a fall. But so it's not like the earnings were so great. It's so much as it is shorts covering. So that did skew the KRE a little bit, if you ask me. But, it's above the moving averages on the daily. I just don't like the weekly chart. If we look at the large bank ETF from the KBE, I like that much better. It's still holding up nicely. So this is a big point for bulls here. If this can hold up, that's a good sign. If we ever break below this white trend line on a weekly close, watch out. Broker dealers, what can you say? Really strong chart. I still think it's going to come back to 560 eventually at some point, and 520. But again, the volatility right now is helping broker dealers, so I think that can be factored in there. But good move for XBD, and I'll just say 620 for now. Really quick before we go to crude, because we always start with crude, I want to start with wheat today. I haven't talked about it in a while. Higher high now, and we had a rally last week, and it followed through this week with a higher high. Additionally, take a look at corn. This is soybeans. I was going to talk about this anyway. ZS, nice base, and good rally the last 3 days. Again, I've been telling members, 618 should hold here, and this is a good area, and it's starting to uptick now. And the same thing on ZC. There we go. There's corn. I talked about the 440 to 420 level. Look at what happened. We came way down. It took us years to break out of this area, and it's getting back tested too. And corn getting a bid. So I think the grain's starting to firm up here. I haven't talked about MOS in a while. I think this wants 25. I talked to you guys about this a long time ago. I'd be a buyer at 25. So MOS in a little bit of trouble. NTR is in much better shape, as is IPI on the charts. So just covering those really quickly. All right, let's flip over to oil. So here's the one thing that would be confirming potentially a slowdown or the jobs data. Right, so oil definitely broke down this week. So you can there's a head and shoulders right there. And we could take the target and just draw it in. That should take you down to the low 70s. I still think you probably get a bounce on Monday or Tuesday. In fact, I'm pretty certain it will. I would actually be a buyer Monday if we're down again. You do have a 50% fib retrace, 100 MA, and you're going into this support zone. So we probably get a bounce before we head down there. But crude definitely came in. Gasoline prices came in. RB. So a little bit of slowdown there. I don't know. It's an election year. Who knows what's really going on there? But they came in and the XLE. I'm going to say this is in corrective mode now. So last week we gave it the upside bias, but what happened? This week we closed below that previous 2022 high, and we closed below that breakout bar. So I think XLE's got to go down to 87. I may be a buyer there. I may be a buyer. Depends on how we get down there, but that's the next level that I'm looking at on XLE. XOP, same thing. I'd just say 140 right now, 140, 143. And then OIH, I'm just going to say 290 to 300 right now. I think that's where it needs to go. I do really want to, I played OIH a while ago, made a lot of money twice, and I will do it again. So I think that this correction is good. It's a good opportunity to get in, but I don't think that they're done coming down yet. Uranium, I really like what CCJ is doing on the weekly. So we had the failure of that inside bar, but it managed to hold up anyway. And then now what do you have? You have another bullish inside bar on the weekly. We tested the 20 week. Give this 2-3 more weeks, it can break out. URNM never closed below that weekly green bar, and it is holding up. It's got another inside bar. This looks really good. Little trend line right there. Might need to pull back one more time, but it looks fine. And the NJ, and I always type that in wrong. There we go. The NJ, the same thing. There we go. Green bar inside, good pattern. So uranium and uranium stocks holding up. Nat gas got a bid this week. So last week it made new lows on the M contract, and then we got a little pop. If I can, so kind of watching this falling wedge pattern, we did have a good bid today, and I've been trading in and out of this with members in the trading room. We've been, trading the range and making good money doing it. I missed this move here. We got stopped out on the move down. We had a profit we took here, and then we stopped out break even on the second part of it. So I missed this move here, but it is a good one. And what I like about it, I'm just going to go to the M contract. I like that you got the weekly close above all these pivots here. So look at all these pivots here around 214, 215. We closed above that. And you got a nice trend line breakout there. So nat gas, hey, it's trying. It's acting much better. You can make a case too that you've got like almost like a broadening kind of bottom, slight lower lows, and then a push up. Seasonally, nat gas is way overdue for a rally. Typically, it bottoms in between February and early April, and then rallies hard into June. So it's behind here, but we'll see what it does. Again, I think if there was a better way to own it long term, I would buy everything I could because just looking at the long term chart here, I mean, like this is where you buy it, right? I mean, but it's hard because of contracts and contango and all that stuff. But nat gas, good bid. Dollar index, again, backed off with bonds today, tested the 50 MA, closed back above 105. This is fine for now. The weekly chart is fine, but it did back off. Gold continued to back off this week. Again, still looking for this to go a little bit lower into the 2200 to 2250 area. I like what GDX is doing. Let me just show you the weekly. That's very good. I love that. I'd like to see a little bit more. Go AU. I did pick some of this up with members too. I'm looking for that to go higher. I like how the miners are leading the metal again, right? So silver, despite being down this week, you've got like higher lows here on the SIL, higher lows on the GDX versus lower lows on gold and silver. That's bullish. And I like that we're just slowly pulling back on both of those. So nothing wrong when you see that after a big move, just digestion. Platinum had a nice up week too, went back to the trend line. It needs to get a higher high here. I think it will happen eventually, as will palladium. Palladium's still a laggard, but I love it down here because, once gold and silver really start to take off, I think this will be the laggard play. So I've still been accumulating. And then copper, finally, copper had a red week. So look at that. Let's zoom out a little bit farther. Right up into our zone, right? We talked about I was like, well, maybe go to 445, maybe it'll go to 450. Oh, I guess maybe it'll go to 460. And it finally got up there, got all the way up to almost 470, 469, 45. And just a lot of supply up here, just a ton. So it's going to need to either go sideways or pull back into 425. 425 is support. But what a run for copper here. So it does need to cool off though. All right, and then lastly, Bitcoin here did a little damage on the daily. So we did make a slight lower low there, but we got a nice bid off of it. So I talked about this level last week. We did get the lower high like I talked about, and then we got a bounce. So here's another little short-term trend line. We can actually just get rid of this. We don't need that anymore. We can leave this one on there, I guess. Your short-term, we'll watch this trend line here. Ultimately, I think it wants to go test 52. I think I'd be a buyer there if we got down, depending on how we get down there, I'd be a buyer for a bounce. That said, we might not, because look at the weekly. All we did is essentially just test the 20-week moving average. So really, like on a technical basis, on the weekly, there's nothing broken with this. And I've been saying this for weeks now. What have I been saying, guys? If you catch up to the 20-week moving average, it can go higher. So big picture, still bullish. Daily might be a little bearish, might have to go down a little bit more, but I don't see any structural problems here with Bitcoin at all. All right, so anyway, yeah, next week, a lot of Fed speakers out, much less data. There's no more volatility events. We got through earnings. We got through, there's a few companies reporting, but nothing that matters really. No more job stuff for a while. So market may have a little bit more free price discovery. We do have a 10-year auction on Wednesday and 30-year on Thursday. That could be market moving. But outside of that, I don't really see a ton more here for the rally. Again, I could see we cinch up a little bit more. But I do think we get a lower high here at some point over the next week or so. So kind of that's the base case here. And we'll see if that ends up being right as we get into next week. So anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on conovertrades.com. I'll see you guys all next week.